we just had a crazy 2 weeks in the stock market, and if you've been invested, then you would have felt a lot of volatility inside your portfolio. We had the DeepSeek news come out. We had all of the big tech stocks come out and report earnings. We had the Trump tariff news. And now we are finally on the back end of it. And today I want to talk about how this affected my portfolio. So obviously we pulled back a little bit on the DeepSeek news. We pulled back a little bit on the Trump tariff news. But all in all, it's been a pretty good 2 weeks, actually, and the market has recovered nicely, and obviously a lot of the big tech stocks reported solid earnings, so that really did boost the market back up. So today I just want to talk about how it affected my portfolio, what we can look at going forward, and I'll dive into some of the earnings reports for the big stocks in my portfolio. If you're new here, my name is Sheldon, and I make completely transparent videos talking about how I invest in the stock market, and I am not some expert, I'm not some self-proclaimed guru. I'm just some guy that has been investing in the market for 5 years, and I like to share what I've learned along the way. So if you're at all interested in business and investing, that's what we talk about here, and drop a like on today's video if you get any value out of it. So let's get right into it, and the first thing that I want to talk about is Palantir. So obviously Palantir came in and they reported earnings, and the stock absolutely went ballistic. I did not expect Palantir stock to go to $110 a share. Okay, I just made a video. My last video was on Palantir, and I said that I was hoping that the stock price would chill out a little bit, honestly. And I think it was fair to say that we could expect that they were going to come in and beat a lot of the guidance that they had, but they came in and crushed it, and the stock price just continued to go crazy. And obviously, I sold a couple more shares. I really just need to continue to rebalance my Palantir position. I don't want it to be this massive position in my portfolio. I personally like to be diversified. So if the stock just continues to climb and climb and climb, I am going to continue to chip away at it. We went down to 99 shares. I didn't sell that many. I was at 100 and I think 11 shares, and then I sold down to 99 because, that's Wayne Gretzky's number, and, I'm comfortable with it. We're now over 1,200% gain on Palantir. So, let's talk about what their earnings are looking like. So, obviously, we went through their earnings, or their last quarter's earnings in our last video, but they crushed it. And, let's just look at their stock chart, because this is pretty crazy. And these sad faces are here because the valuation is now, I don't even know how to describe this valuation. It's at at this point. But let's look on 5 days. It went from 83 up to $104. And this is the day that I sold just a couple shares, because, I was like, let me take a little bit of this position off the table. And, I didn't expect the stock price to go that high. So why did it go that high? It's because they absolutely crushed earnings. They came out, and their outlook for Q4 2024 was between 767 and 771 million in revenue. And what did they come through with? They came through with $827 million. So obviously, they crushed their revenue estimate. Their adjusted income from operations, their outlook was between 298 and 302, and their adjusted income from operations came in at 372 million. So, they crushed everything. Let's be honest. They crushed absolutely everything. Their revenue guidance was between 2.805 billion and 2.809. And their revenue came in at 2.865. So, that's not I guess that's not a crazy beat, but they came in and beat expectations. So, or they beat their guidance on revenue, income from operations, U.S. commercial revenue, which is one thing that I think is really important for the longevity of Palantir. If they want to continue to scale, there's only so much you can get from the U.S. government in terms of contracts, right? If you really want to turn this into a massive trillion-dollar company, they have to start to gain that commercial market share. And so they guided for 687 million, and they came in with US commercial revenue growth at 702 million in that quarter. So they beat there. Basically, if this was a report card, they got A pluses across the board, is the easiest way to put that. That's why the stock popped. And so much money has just continued to flood into Palantir. It is crazy. It's actually insane. And so to look at their guidance for Q1 2025, they are expecting revenue between 858 and 862 million. Adjusted income from operations between 354 and 358, and then revenue for full year 2025. So we're not going to actually know what this number is until this time next year, but they're guiding to have about 3.7, around 3.7 billion dollars, and their revenue this year was 2.8. So let's be honest, they're probably going to crush that. I mean, let's be honest. And that doesn't mean I think the stock price is going to continue to go up. But I think the fundamentals of Palantir are going to continue to be good for at least another year, right? Like, it's just, the fundamentals are so good, and there's been so much that has gone right for Palantir. But look at this PE ratio, okay? Like, almost a 600 PE ratio. That is insane. Like, let's be honest, it's crazy. The valuation on this thing is crazy. It is a $252 billion company, and they came in with like roughly 2.5 billion, right? Like, what was the actual revenue again? It was 2.8 billion. Okay, so they're a $250 billion company, and their revenue was 2.5 billion. That's it. Like, that almost doesn't make sense when you put it like that, right? Like, the valuation on it is crazy. Again, that's why I'm selling. Like, and I'm not selling huge. Obviously, I'm still a Palantir bull, and I like to hold for the long term. And it's still the biggest position in my portfolio. Like, like, I'm just taking some profits because I don't mind building a cash position while all of these valuations are continuing to basically explode in the last couple years. The historical PE ratio is way above average, right? Like, the S&P is at like 29 historical PE ratio, when I think historical average is like 23. So we're trading at high valuation metrics right now. And like, so Palantir is just a good example of a company that crushes it fundamentally. Obviously, the growth is insane on all levels of their earnings. They came in and beat everything pretty much. But at the same time, there's been so much expectation baked in for growth that the valuation has gone crazy. And that's why I put a sad face here, because I don't like holding a company that is so valued it's so highly valued, because a lot of future growth is baked into the current price of the stock price, right? It just makes me feel a little bit uneasy, if I'm being honest, just a little bit, which is why I keep chipping away. But it's just one thing to keep in mind for a lot of people that have Palantir stock is fundamentals are crushing it, but I believe it's overvalued. So the next stock that I want to talk about, I do own, and that stock is Meta. I currently have 8 shares of Meta, and I have it at an average price of $253. And right now it's trading at $714 a share. I'm up around 181% on the stock. So let's talk about Meta. They've had a crazy year. On a 1-year chart, they're up 57%. Just year to date, they're up 22% already in 2025 alone. So Meta has had a pretty crazy year, to say the least. They're a $1.8 trillion company in terms of market cap. Low PE ratio, like not a crazy PE ratio on Meta right now. They're in line with the S&P 500, which is crazy, right? Like, you look at Palantir, $600, or not $600, but 600 multiple price to earnings, which is crazy. And then Meta is just coming in with a cool 29, like, so if we look, one thing that I always like to look at with Meta is, right now anyway, they're guiding to expect capital expenditures will range from $60 to $65 billion. So Meta is investing a lot, and you know where a lot of that CapEx is going to go to? It's all AI data center related, which is what I like to see as a Meta shareholder. That's where I would like to see them investing their money right now. And they've been doing it for years already, obviously. So they're starting to see some of the ROI on their CapEx from like years ago already that was targeted in that AI and data center direction. And if we look at their balance sheets, something that's interesting that you can see on Meta's balance sheet is their land, buildings, and machinery. So land, 2.5 billion, buildings 47, and then machinery is 75. So, I mean, what do you guys think all of that is? What do you think? It's all AI data center related. Well, maybe not AI specifically, but data centers, right? Like they have tons of data centers. You can go online and you can literally look up all of their data centers. They have a website for it. Which is kind of interesting if you're a nerd like me. You can you can see it. But they also came in with, if we look at income statements, they came in with a record quarter. I believe they had a $47 billion quarter. And I think I talked about Meta in one of my last videos, or like I don't know exactly which one it was, but I was thinking that they might come in with a record quarter, and they crushed their prior quarters, like 48 billion compared to 40, like just 40 from Q3, 20% revenue growth quarter over quarter, like that. Meta's coming in with almost some Palantir growth numbers right now, okay? Like that's crazy. And that's why the stock, it definitely got reflected in the stock price, right? Like over $700 is pretty crazy for Meta. And year over year revenue growth was 21%. And I'm going to keep holding my Meta shares. Let me be clear. This Palantir, Meta, these are long-term investments, guys. I'm not a trader. If you've watched this channel before, I don't even really play with Bitcoin at all, or these meme coins that you see people throwing money at. I think it's bullshit, to be honest. I am a long-term stock market investor, and that's what I talk about on this channel, and it's also what I think you should be as well. Not investment advice. Do whatever you want, gamble your money away in day trading. But if you want to make real money, like if you want to be sitting on $36,000 of returns, I think the right way to do that is through long-term stock market investing. So, just to throw that out there, that is what I do. I'm a long-term investor. I understand that I'm young, but I've been doing it for 5 years, and I have held Meta stock for probably close to 5 years now. I believe I was buying Meta stock all the way back here. I bought all the way up in this 2021 bubble. And then while it was crashing, I kept buying shares. Obviously I only have 8 shares, but I didn't have that much money in the market when I started investing, but I've always loved Meta as an investment. They essentially print money, right? They make money from digital advertising. And if we look here, obviously it's average, let me just get my cursor back. Average price per ad has gone up 14% and 10% year over year for fourth quarter and full year 2024. So the average, if you run paid advertising, it's gotten more expensive, but people can't get away from running paid advertising, right? Like Meta has the audience. Meta has the audience that everybody wants. And if you want to run targeted advertising, you use Meta if you're a business. So, and obviously people have continued to use it, even though the price of advertising has started to continue to go up. Daily active users, or family daily active people, 3.3 billion. Guys, that's like half the world that uses Meta platforms, like all of their different platforms. It's crazy. It's absolutely insane. And so obviously, like if you guys know how Meta works, they make money by advertising to this user base, right? And I believe it's like 98 or 99% of their revenue comes from advertising. So I don't think the digital advertising market is going away at all. It's how Google makes its money as well. Obviously, they had a crazy fourth quarter. Fourth quarter is usually really good for Meta. That's their Christmas, all of the holidays. People are spending extra on advertising because they're trying to move extra product during the holidays, obviously. But yeah, you know, Meta right now, just a hold for me. It's also continued to creep up to one of the bigger positions in my portfolio. You know, and I'm happy with how the stock has performed, obviously. And their business model, I think, is a cheat code, and I think it's a good stock to hold in your portfolio. It's not even like that overvalued either. Like the valuation on it is it's trading at a 29 price to earnings ratio. And what is their, let's look at what their price to sales ratio is. So price to sales is 11. So that's slightly more than like an Oracle. I believe Oracle's at like a 9. But Palantir's price to earnings is like, or price to sales is like over 80. So obviously like Meta has grown into its valuation, right? It's been around for so long that the valuations here, the actual company of Meta is like right here. In terms of Palantir, the valuation's here, the company's still down here. So Palantir has room to grow. Meta has already grown into its valuation, and that's why I'm, you know, comfortable continuing to hold their shares. I think this stock price could be over $1,000 in a few years. So yeah, that's pretty much the update that I wanted to give on Meta. Okay, the next stock that I want to talk about is probably one that not a lot of you guys actually hold in your portfolios, but I think it's, even if you don't hold it, it's a good idea to know what's going on with this stock because it's pretty much the biggest company in the world, or at least it competes for first place with another one. So that stock is Apple. And I get it. I know a lot of you guys don't like Apple stock, don't like the proprietary Apple products, and know that there's slowing iPhone sales and all this shit. But, you know, I'll show you my position. I got 14 Apple shares at $143. We're up 59% on the stock. Apple's another one that I've been holding for pretty much ever since I started investing. I was holding Apple stock. So I'm a big fan of Apple's products. You know, I'm pretty deep into the Apple ecosystem. The next laptop I'm going to buy is going to be a MacBook. The next iPhone I buy is going to be an iPhone. And there's a good chance that a lot of you guys are watching this on an iPhone right now, even though you hate Apple stock. So just think about that. But Apple, okay, so they have been kind of struggling a little bit lately, obviously. Just in the last month, like their share price has been jumping around like crazy. Year to date, 9% already, down 9%. 1 year, they're up 20%. But they almost, they hit 260. And so they're like $30 off their highs right now. Price to earnings, like they're a little bit more expensive than Meta, which is kind of surprising. $3.42 trillion market cap company. And I guess one thing that isn't even really Apple related, but I want to show it in this video before we talk about Apple's earnings, is I'm sure you guys have heard of the stock Skyworks before, but look at this chart, guys. This is insane, okay? So Apple came out, and I believe, what did they say? Skyworks Solutions confirms, Skyworks Solutions confirms that its content in the next generation iPhone 17 will be substantially reduced as Apple moves to dual source a key component. So obviously Skyworks, a large portion of Skyworks revenue was heavily reliant on Apple, and Apple went to Skyworks and was like, nah, we're going to go from 2 different suppliers now. And obviously that really hurt Skyworks' business model and just their revenue. It says by approximately 20 to 25% through the fiscal year 2025, potentially reducing mobile revenue by over $380 million year over year. So this is just, it's interesting because it's an example of a company having a large portion of their revenue heavily reliant on another single source. Right, like they had a large portion heavily reliant on Apple, and Apple came out and was like, you know what, nah, like we're gonna end up doing something else. So, look, it's just an interesting thing that happened in the market. Like it went from 86 to like 64 in one day. crazy move anyway by Skyworks and because of Apple. So if we look at Apple's earnings here, I believe, sorry, I had the page before. So their net sales for the quarter was a little bit of an increase. They did $96 billion in 2023, $97 2024. Or that was their products, sorry, not their total net sales. So their products went up a little bit. Their services went up more than their products did by almost, $3 billion compared to like $1 billion. So obviously the growth rate here is not very high. And I understand that, and I know that, and that's what I honestly am expecting out of Apple. It's a stability play in my portfolio. It's like a stability / small growth play, right? Like you're not buying Apple stock to get a 1,200% return like you get in Palantir. Okay, like Apple is just a reliable company that has a reliable customer base that buys their products, that likes their products like me, and they're a big, slow-growing company. And that's why you own Apple stock. It's reliable. They're good at keeping their stock price up. In a market crash, it's going to crash less than a lot of these other companies. And I like to have stocks like that in my portfolio. So obviously their service revenue came in, and they had good service revenue, which is a highlight almost of their earnings here. But also, like, yes, for the haters, this one's going to prove you to be right. iPhone sales went down in the quarter, and that was like the fourth quarter too. So that was like the holiday quarter. That's not good. I don't like to see Apple sales or iPhone sales drop. But Mac came in. Mac sales went up. iPad sales went up. Wearables went down. And services went up. And Apple continues to lose market share in China. Greater China was down 11%. It's kind of interesting. Japan was up 16%, America 4%, Europe 11%. So total net sales was up 4%, which is pretty much what is expected out of Apple at this point. If we look at their financials, revenue growth, trailing 12 months is up 2.61%. Full year 2024, 2%. And I kind of do think that Apple's going to come in and, at least post like 2 to 5 or 6% revenue growth for maybe the next 2 years. And honestly, if that's what they come in at, I'm happy as a shareholder. Apple, for me, it's a stability play. Like I said, I'm not looking for growth, not like these crazy growth numbers out of Apple. I like to have these types of companies that are defensive. I view Apple as defensive if the market crashes. They're good at keeping their stock price up. And that's pretty much what I wanted to talk about for Apple. For me, right now, I have been slowly building a cash position. So I'm sitting on about $5,000 in cash right now. And, I'm going to keep, unless Palantir shoots to 130, I'm not going to sell anymore. I can't see myself selling any of my other positions, so I'm going to keep that cash around until, maybe I see a couple deals out there in the market. Maybe valuations are going to come down at some point, and I believe we have a couple more companies that are going to come out and report earnings, but we're also kind of on the tail end of earnings after all of the big tech companies reported. So that's the update for this video. I hope you guys enjoyed. Like I said at the beginning, if you enjoyed, drop a like if you got any value out of it. I really appreciate you guys that watched this video. And if you made it this far in the video, you're a real one. Thank you for watching. As always, I wish you the best of luck on your investment journey. Peace.